Hey everybody, so I haven't made an actual overview video in a while, but I know the markets are really bad right now, so I definitely wanted to look at some of the technicals on some of the indices. So starting out with SPY S&P 500, just going to zoom out a bit. So you can see that, we've been in this uptrend channel for a while, ever since that crash, and things have been going great. And then all of a sudden, we had this one down period, and then we entered a correction. And then we entered this up period where we thought we were getting out of this correction, but it just actually led to a further correction. So where are we right now? If I'm just looking at price action right now, then I'm looking at this downtrend channel. Now, there's two ways I could look at this. I could go wick to wick. So if I'm going by the wicks, I'm going down like that. And I'm looking at it like this. So if I say, oh, what's the bottom of this trend channel? Well, that could be like right here, right around like 394, 395-ish. Or it could go all the way down to the support area around 393. So if I zoom out, why is 393 somewhat significant? What's this area right here? And we did have this weak area of support around 400. So when I zoom in right here, you're going to see that's 405 cents. We broke underneath that today, so it doesn't look too good. So our next area is probably going to be this 393, 394. So I'm going to zoom out back here again. That could line up with the bottom of this trend channel. But if I'm going off bodies instead of wicks, then it could look a little bit different. So if I go off the body and not the actual wicks, it looks something like this. And essentially, we just hit the bottom today. And then we could see a counter trend rally that could possibly go all the way up to like 418. So this 418, 419 area, this should probably be an area where you take a little bit of profits. Just in my opinion. We could always break a little bit above that, and we could trap some more bulls, and then we could get another bearish rally down. So, I mean, it's definitely not looking good on the S&P 500, but I do think a counter trend rally is in store if we're going off this downtrend channel, because we've basically hit the bottom of this channel, and then we should have a nice little rally up. And some people might think, hey, this is the end of the bear market. Now we're going to go to all-time highs and to the moon, and we're going to go all the way back to 480. But, I just don't think that's going to happen. I think if we do see this 419, that's going to be, definitely try and get out and accumulate some money in case we go well underneath 400. Because look, this area right here, that's not a whole lot of support. I mean, if we're looking at this for support, it's very weak. Now, for us to actually get some strong support, we need to go all the way to SPY 350s. Now, this happened, this move down here, this all happened when the last time SPY was in a correction. This was when Tesla and Apple both split, like literally the same time, and the market had this crazy euphoria. And then finally, we got to this point where everybody just said, well, this is getting too frothy, and then sold off. We had this double bottom and then this rip after that. So this was the 2020 correction. That's the last time the S&P 500 went into a correction. So we could go all the way back down to 350, maybe even lower. I mean, I'm thinking like the worst case scenario for like 2022 could be all the way like 314. But I do think that this 350 could really happen, It's looking more and more likely that this could happen. And just looking from here, like this 393.55 area, all the way down to 350, I mean, just look at that. There's no support. Very weak support. Even right now, here at around 394, that's a very weak support. That's not going to do very much for us. Maybe it will, but yeah, the best scenario that we could look for here is maybe we just go sideways for a while. You know? We just go sideways and we build out a shelf right around this 400 area, and that becomes a new support, and then we make a new leg higher. That could be literally the best case scenario for the S&P 500. Now I'm going to take a look at individual stickers and just kind of see where I think they could potentially go. So Microsoft's a big one. Microsoft is at 264.58 right now. So this run up on earnings was basically just we got lied to. And when we zoom out, Microsoft has been following this trend channel for quite a while. So for us to break out of this trend channel, this is kind of what really started the massive sell-off, you know? We're breaking underneath this trend channel. And if we do rally back up, it's probably going to be resistance. So, if we're getting lucky here, like maybe we could go all the way back to 291, and that's going to act as resistance from here. So if I do zoom out and I think, well, where can Microsoft go to if we continue to sell off? I'm thinking Microsoft could go all the way back to 235. So, rather than just technicals, I want to introduce a little bit of valuation here too. So if we're going to 235-ish, let's just look at what Microsoft earnings per share is. I've introduced this website to you guys several times. It's called Macro Trends. And when we're looking up earnings per share, they're always using diluted. So let's just give it a second to load. And what is our trailing 12 months? Trailing 12 months is $9.58. So let's do the math. Let's calculate what the PE would be. So 958, 235. 235 divided by $9.58. So right at this price, Microsoft will be trading at 24.5 PE. Now that could still be a little bit expensive. So let's just look at what a 20 PE is for Microsoft. So we'll do 958. Now that's 191. So if we were to sell off all the way to 191, that would basically be, look, prior pandemic highs. Yeah, there's like the really, really, really worst case scenario. Now if Microsoft went all the way down here, oh my gosh, I don't even know what SPY would be at. It would have to be in like the low 300s. So yeah, there's quite a bit of risk if we do see earnings just continually getting weaker every quarter, and we do enter a recession. I mean, we might already be in one. So next example. So there is one thing I want to point out with Apple. So we had this prior resistance line, but now it's been acting as a bit of a support line. So you can see right here that we're actually right on this line right here. And we're at this prior area of support. So we can actually move this down a wee bit. Yeah, like right there. And you can see that we're basically on this trend line right here. And with that, we're also around this support line, which was the prior bottom for February 24th. So, it's hard to say. I do feel like Apple is going to have a rebound rally. Now, where do I think this rebound rally could go? I mean, it could go as high as maybe like 162, like all the way to this top trend line. But it could also hit this old trend channel, which is like 157. So, it could just have this short-term bounce, maybe like 2% up. or 3% up, I guess. I guess that's kind of like 4%-ish. So yeah, it could have like a 4% up day, and then maybe it could just reject again. So let me zoom out for you guys. Do you guys see this trend channel here? So up, down, up, down, up, down, up, down. Now we're below this trend channel, so it's not a good sign for Apple. And you can see that if we do have a rebound rally, we could reject off this old trend channel. Now you're going to notice that I'm not really using moving averages. And the reason why is because we're basically below every single moving average on just about every single chart out there, other than bullish commodities. So the moving averages, they're not going to tell us much right now because we're below every single one of them. And let's see, what else do I want to look at? Let's look at Google. I haven't looked at Google in a while. All right. Oh boy, my chart's messy. Let me just clean up a little bit. Get rid of all these old lines. Alrighty. So I think now it's becoming increasingly obvious that we're in a downtrend channel for Google. As you can see, we're just moving back and forth down here. So where do I think Google could actually fall to? I mean, that's a hard question. I mean, I'm not really seeing a whole lot of support here. But, I would say that there is a nice little shelf right around here. So that's like 2,140. And there is another nice little shelf right around here, which is like 1,750. So, if things do get really bad, maybe we could fall all the way down here around midterm election period. So let's just calculate Google PE here at those levels. Yeah, Google right now is like 110 earnings per share, 110.53. So if we were to go down to this 2.3, let's calculate that. 2,130 divided by, what was that number again? 110.53. So yeah, that'll be like a 19 PE. So let's look at 1750. And yeah, that'll give us like a 15.8 PE. I think Google will definitely be a buy around this area. But also keep in mind that every single quarter, that those earnings per share numbers are going to change. So you might look at this video and you might write these numbers down, but I'm telling you, those numbers will change. So if we get another quarter and we get weak earnings per share, well then 110.53 isn't going to be the trailing 12 months anymore. It's going to be something lower. And this PE ratio that I calculated is actually going to be higher. So it's not going to look as cheap. So this is kind of like the PE trap. The PE trap is that in the future, if earnings just get weaker and weaker and weaker, well, then I'm going to be using a lower earnings per share number, which is going to give me a higher PE ratio. So I cannot stress this enough. So if you do have a company and they did give you forward guidance, use that forward guidance earnings per share figure. Or if they did give forward guidance on revenues, then make an estimate on what their earnings could be. And it is good to look at what some analysts are estimating earnings per share to be as well. So this is just information you can look up on the internet. And Let's look at the next chart. Let's look at XLF. So XLF is the financials, and you can see that it's getting really, really beat up. But I do want to note that we're on the bottom of this trend channel right here. So let me zoom out for you guys. You can see that we're at the bottom of this trend channel. I think we're due for a rally of some sorts. So if XLF rallies, let's just say, let's see if we can find like a midpoint. Yeah, I would say like that's a midpoint of this trend channel. So sometimes you can have like a trend channel within a trend channel. So if we do get a rally, I think we could probably go to like 35.83. And if the financials see a nice little rally, and if tech sees a nice little rally, then guess what? That's how we're going to see a rally on S&P 500. So let's go back to S&P 500 SPY. I'm going to flip on the moving averages just to see how bad we are. Oh boy, yeah. Even at the top of this trend channel, we're not even going to hit the 20-day moving average. That's pretty bad. So I'm thinking maybe, let me see if I can find a midpoint here. Line it up with this doji right here. Maybe we could see like 405 and then we get rejected. Who knows? I mean, we might see like a tiny little rally. Just the way that things have been going right now is that every single little rally we see, it's been getting faded pretty hard. So that's one thing to look at. But another thing that I do want to note is that we closed under that 400 SPY 400. So that just looks really bad. We could maybe even see this trend break down, and we could see further selling. So I wouldn't discount that entire factor happening. And maybe in the future, it could be possible that this downtrend actually extends even further. And then, maybe we could bounce off this in the future. Who knows? That is always a possibility, when you see these old trends play out. So let me just see what happens if I actually extend this old trend line out. That's interesting. So yeah, look at that. If I extend this old trend line out, then yeah, we could actually potentially bounce where we are right now. So, I think it's actually highly likely that maybe tomorrow morning we could sell off a little bit more, just a touch more, and then we could have like a rally point, possibly. But I do think this is interesting. Look, this old trend channel that was holding us back, the top of this trend line, could potentially act as support here in the future. So yeah, this wasn't planned. I actually just figured this out right now. So that's actually interesting to see. I hope you guys are as interested as I am in this. So that's my video on technicals, and I hope this kind of helped you out. So stay safe out there, guys. And maybe we could see that technical bounce, Maybe we could see 420 and, everybody will be happy again. 420, SPY. Well, have a good one and stay safe.